Hi everyone, end of day February 6th. This is Ms. Schneider, Chief Strategist of marketgauge.com. And we're going to do a follow-up to yesterday's video plus add a couple of other currency pairs. So let's start with the SPX because yesterday when we did the video we talked a little bit about the inside day that was forming to Friday's range. And what's so interesting right here is now we're getting an inside day to yesterday's range. So when you have two inside days, particularly at pivotal points like new all-time highs or new all-time lows, it generally means something's coming bigger. Of course, we don't know exactly what that is. Clearly, if we had to make a guess, we would probably guess higher based on the fact that we're getting a doji day here. This type of pause near the highs is interesting. We know there's been a tremendous amount of selling, institutional selling coming in at these levels. Yes, amazingly, growth stocks actually went red today, but we're getting a rotation. So that could be a case for either one. Now, when you have two inside days, you don't no longer have to go to the outside day. You go to the second day and you watch the range there. So if I were going to not jot down numbers, it would be 4,957.19 cents, which was the high of yesterday, and $4,918.09, which was the low yesterday. And as clearly you can see our doji level here at 49.48, we're kind of smack dab in the middle. So I would keep an eye on those two levels very clearly for tomorrow. And obviously, if we break down under that 49.18, then of course we're going to start to look back at more like 4,900, 49.05. And if we break out above this 4,957, even with the highs at 4,975 the other day, to me it certainly means that we're probably heading back up closer to that 5,000 level that many people have been talking about. In terms of the momentum, yeah, we've been talking about kind of the weakish momentum for a while now, but it went lateral today and it's still above the Bollinger Band. But you can rest assured that if this thing breaks down under the low of yesterday, that momentum will go into a mean reversion. And then the question will be, are we really finally heading for the correction? Or is it just going to be a slight drop in price and then we basically work off any overbought conditions in time as opposed to price? Of course, 4,800 is what a lot of people are looking for, and that's when the spectacular move of these last $170 happened from. Well, everybody has their eyes on gold now because it just hasn't gone anywhere. So this could be, as we know, the start of something much bigger in terms of the upside, or it could be that the market is just getting tired and we haven't actually seen real selling pressure yet, but if we do, then that will impact it too. So we're smack dab in the middle. And yesterday when we talked about it, we mentioned the momentum. So the momentum, I said, would probably come right back up to the moving averages, and that's exactly what happened. And it makes a lot of sense considering where we are on price. Another inside day, sitting on the 50. So that kind of makes it pretty easy. I think if we really just want to keep it as easy as possible, we could say 2040 is your pivotal number. Underneath that breaks the 50, which probably means a move back down, I would say very possibly back to that 2020 level that we've been talking about. And even though we have an inside day and we want to technically look at the outside day, if we look at that and we hold here above this 2040 level and we can get back through, let's say, 2060, then of course I would think that at that point we would start to see another test up a little bit higher as this thing is just chopping around 2075. And it goes back to the same numbers we've been watching through 2075, much more bullish. Under 2020, obviously a lot more negative with a bigger correction expected. So here's crude oil. Nice to know I'm guiding you with some decent numbers because we said that we didn't get all that negative here, partly because, remember, it broke down under this low of 71.79 and then came back through it. We called yesterday's doji level, which was about 72.75 to 72.80 pivotal. Today's low has been 72.38, so it went a little bit lower. But the open today, look at where the open was at 72.76, so right where it opened and closed from yesterday. And it had that brief dip today. I'm not really even sure why. More talk about potential peace, which of course nobody really believes. So here we are above that 72.75, and more importantly, back above this 50-day moving average at 73.30. So that's going to be our next pivotal point. We wanted to see this whole 73.30, or it'll be a failure of the 50, in which case we may see more selling pressure come in. If we hold that 73.30, remember these levels have been relatively consistent here. We're looking at 73.90. Today's high slightly under that at 73.82. So through 82 to 73.90, yeah, I'd say here we go once again, and probably that would mean a move somewhere up to around $75 a barrel, and then we could take it from there. So again, we break down under this 73.30, then we'd have to look really hard at that 72.70 to 72.75 level, and then we break down under that, and I think things start to look more deteriorating. But we also are back over the 50 here, so there's no real price diversion. We're back over the 50 here in momentum as well. So we'll see what happens, but tomorrow should be a very interesting day. So in the dollar versus yen, we also talked about the fact that this could be sort of a topping pattern. We didn't know, of course, until today, and it looks like so far that is the case. And remember, we're looking at 60-day highs and lows, reversals, and this is definitely a 60-plus day high. Remember, though, I was basing it on the fact that the dollar wasn't able to get through the Bollinger Band, and the momentum was good, but not great. So now here we have the start of a potential reversal top where the yen might gain a little traction against the dollar. So what do we have to look at? Yesterday's low, 148.26. That becomes the important number. We get back through 148.26. Of course, the reversal pattern gets negated, not only 148.26, but more importantly over yesterday's high, which would be 148.89.4. Over that, we're back in business, and then we can go back and look at some of that older resistance levels. But if we stay under this 148.26, considering today's range, and the low so far today is 147.84, remember we were saying that it would find some support down closer to around 147.10, 147, and that's where I would be looking for next. The ranges have actually gotten a little bit wider on this too, which is interesting, because generally when you start to see wider ranges, then that could mean that there's more inflow in this, and today it could be a disappointment on the inflow of anticipating the dollar going even stronger, that not happening, but that remains to be seen. Looking at some of the other pairs, so this is now the opposite. We were looking at the dollar against the yen, now we're looking at the euro against the dollar, and you can see the dollar strength being reflected here in the euro weakness. But a couple of things I think are really interesting. Even though we did not have an inside day, this took out the low by a little teeny bit. We are actually seeing a little bit more strength coming back into the euro, so that's a good thing. But also if we go back here to the last time we were down at these levels, which was in December, that low in December was 0.07, well 1.07, and I'm not going to look at all the other decimals there. But here we are again down at 1.07. So that's a good support level. I wouldn't necessarily say double bottom. It's too soon to say that. But certainly a good support level and a level for you to look at. So under 1.07, then I think you're going to see a stronger dollar. That, of course, will also impact the dollar-yen chart. So 107 is going to be your number. If we can hold 107, would we anticipate a little bit more weakness in the dollar and a little more strength in the euro? Well, I think if we go back to this cluster when we made it, where did things get interesting? And things got interesting when we opened up on this day. The open on this day was at 1.079. So let's call it 108. So if we get through 108, I think that could be an interesting level right there. Here it is again. And then if we get through that 108, see where it looks like if you look to the right now. If we get through that 108, then I think we can start looking at 108 and change, but really it doesn't get interesting until we get to that first resistance point at the 200-day moving average at 108.35. We get through that, then maybe the dollar has really reversed. However, we can't really say that with any great confidence while we're looking at momentum down here. So this is where a mean reversion, which we got one here, but it didn't last very long. We need to get another one, and then we need to see this get to the point where it takes out some of these moving averages, and then we can say the euro looks like it's ready for blast off and the dollar looks vulnerable. But we're certainly not there yet. And finally, let's look at the dollar pair of the pound versus the dollar. And again, obviously the dollar had gained traction against the pound, but what we can see right now is kind of similar to what we just looked at as the euro, which is some historical support. When I say historical, not going back that far, December, but still support 2 months ago here at around these levels of 125. We didn't even get down that low. And unlike what we just saw in the euro, we're actually getting an inside day here. And look how well, this was the closing price this day, which was at 125.318, and the opening price today, which is 125.318. So that's why I keep giving you sort of subliminal lessons in looking at bodies of candles. So when you get that type of situation where you can see that 125.318, that gives you a point. That's your point that has to hold. If that holds, then the next point that you really want to see hold is the crossover here of the 200 or 125.612. So that's going to be your first area. And assuming that that holds, then the next thing, if we start looking back at all this work here where the real resistance lies, I would say that you have these 2 points here at 126.11. Here, if you look at the high of this day, and then you look at the bodies of these two candles, similar to the ones I just showed you today, where one day's close was the same as one day's open. This is going to be your biggest area to watch for tomorrow if we get through these numbers I just mentioned, and that is 126.33. Then, of course, after that, we're talking about looking at that 50-day moving average and a potential return to a bullish phase. But nonetheless, looking at momentum, that gives us a clue. We were below the zero line, which we hadn't been since we were down here in that price action. And if we just go a little bit forward, we took out that 50, but you can see that the price of the 50, even here, momentum never crossed the Bollinger Band. I kind of told you this was kind of running out of steam to the upside. Then again here we broke under the 50, not with price, but we never really got very far in momentum as we traded over the 50. And then here's that big day down. So now what you really want to see is not only it hold the zero line, but again, like I just showed you before with the other chart, you want to see this eventually get back over not just the 50-day moving average, but the Bollinger Band and then the 200-day moving average. Again, then you can say from a much bigger trend, we actually may have seen this was a last gasp rally of the dollar, the top in the dollar for a while. Premature to call, just giving you food for thought. Okay, thanks so much for watching, and bye for now.